I'm James Anderson, a partner at Doyle Clayton. This is the third podcast in our series of 3 podcasts about the gender pay gap regulations. In our last podcast, my colleague Verity Saxon and I looked at how to calculate the mean and median pay gap and the mean and median bonus gap. In this podcast, we will look at quartiles and how to define them. We also look at anomalies in the pay gap and bonus gap figures. We will consider the reasons why you might want to publish a commentary to your figures and what might be included in it. We will also be looking at some of the practical steps you can take now to prepare your business for the first publication date on the 4th of April 2018. Firstly, Verity, what are quartiles?
When you have calculated the gross hourly wage of all your relevant employees, they should be organised into 4 pay bands. These are called quartiles. To do this, you should list all your relevant employees in order of their gross hourly wage, with the highest paid at one end and the lowest paid at the other. When that is done, the list should be divided into 4 sections, each containing the same number of employees. Each section is a quartile. At Dayton's, as it has 1,000 employees, each of its quartiles will contain 250 employees. You are now ready to calculate the number of men and women in each of your 4 pay bands. James will give an example.
When Dayton's has prepared its quartiles, it must then publish the proportion of men and women in each quartile as a percentage of all the employees in the quartile. Remember, employees who do not receive full pay because they are on leave are excluded from this calculation. The distribution of the gross hourly pay of Dayton's workforce is illustrated in the graph which you should see on your screen. The proportion of male employees in the first quartile, the lowest paid, is 70. Divided by 250, the total number of people in the quartile, and multiplied by 100 to give a percentage. That makes 28%. The proportion of female employees in the first quartile is 180, divided by 250, the total number of people in the quartile, multiplied by 100. That gives a figure of 72%.
Employers are not required to publish contextual information or commentary explaining the reasons for any pay gaps or what they propose to do to address them. However, the government has said that this will be strongly encouraged, and no doubt employers who have a pay gap or a bonus gap may wish to do so. Figures may be skewed for various reasons, which include annual bonuses which are paid in April and so will appear in both the pay figures and bonus figures, while annual bonuses paid in other months will only feature in the bonus figures. The fact that senior roles are held predominantly by men, the exclusion of overtime, value of salary sacrifice and other benefit schemes, and the payment of shift premiums. Men are more likely to work shifts than women due to childcare responsibilities. Employers can look to rely on these and any other relevant factors to explain any pay gap. James will explain where employers should publish this information and what is the deadline for publication.
The information should be published within 1 year of the calculation date. As the first calculation date is the 5th of April 2017, the first publication date is the 4th of April 2018, and then the 4th of April in every subsequent year. Employers must publish the information in English on their UK website. The information must be accessible to all employees and the public and also be available for 3 years from the date it is first published. The employer must also upload the information to a government-sponsored website. The information must be accompanied by a written statement confirming the information is accurate, and this must be signed by a director in the case of a company, a designated member in the case of an LLP, or a partner in the case of a partnership. But what will happen if businesses fail to publish the required information, as happened in Think Act report?
A failure to comply with the regulations will enable the Equality and Human Rights Commission to investigate and take enforcement action. It is not yet clear what that enforcement action might be, Whether this will be sufficient to persuade all companies with 250 or more employees to publish their gender pay information remains to be seen. The government is also required to review the regulations within 5 years of them coming into force to report on their effectiveness in achieving their objectives and to consider whether these objectives can be achieved by a system that imposes less regulation. This will be done at least every 5 years. So, James, what can employers do now to ensure that they can comply with the regulations and publish the required information by the 4th of April 2018?
There are various ways that employers required to report their gender pay gap can take action now. Firstly, you should carry out a staff audit to identify which employees count. Do you have or are you likely to have 250 or more employees on the 5th of April 2017? You can then consider your remuneration package and identify which elements constitute pay and bonus pay. You can do a trial run based on your pay figures for the 5th of April 2016. And if a pay gap is revealed, consider why this is the case and what contextual information and commentary you might wish to provide. You might want to consider what you can do to address any pay gap. This might include recruitment initiatives, mentoring and training to attract women to senior roles, training managers to ensure there is no bias in pay and promotion decisions, considering flexible working and part-time working for senior roles, and improvements in maternity pay and benefits to increase female employee retention rates.
If you pay annual bonuses in April and these skew the pay gap figures, you could consider changing the date when bonuses are paid. This may represent a contractual change, and if so, would need to be agreed with staff. You will also want to identify who will be responsible for preparing the gender pay gap report and who will sign the written statement confirming its accuracy. As an example of what can be done, you should have a look at PwC's annual report for 2016 on Our People. PwC was one of the 4 companies which reported its gender pay gap data under the Think Act report regime, and so have been preparing and presenting this information for a number of years.
We hope this podcast has been helpful in giving you the information you need to comply with the gender pay gap regulations. Unfortunately, we cannot cover every eventuality. If you have a problem preparing your gender pay gap figures, and if you cannot find the answer in this podcast, please contact one of the team here at Doyle Clayton, who will be pleased to help you.